Interesting. So, yeah, I firmly agree with you about the alternative source. If you can identify which one it might be, do you have any inkling on on the alternative side? Obviously, something's going to have to be developed to replace, the old petrodollar system that we've created, and of course the petro infrastructure that we've created. What's your take on the alternatives? What's the most promising in your opinion?
Well, the first two aren't really alternatives in the sense that you think of them, but they're the only two that are big enough to make a difference, and that's nuclear and coal. Coal is certainly not an alternative, but there is enough coal around for us to produce more. What's needed to make coal work is to make it not so polluting, and what's needed to make uranium work is to figure out what to do with the waste. Both are sort of, there are poor answers ongoing that will make those work. All of the others, geothermal is nice in its own local area where you can find it. But gee, the total amount, if you planted switchgrass against across all of Kansas, it wouldn't still be hardly a drop in the bucket. Wind, while somewhat economical, has its problems of intermittency, and the big one that is locally invested a lot is the photovoltaic cells on your rooftop. Just plain is not yet currently cost effective without its tax subsidy. So I kind of write all of them off as big picture contributors, but you should keep your eyes open in the event that some of them might turn out to be potentially possible. Obviously, corn ethanol was a disaster, but I don't need to get into each one of them. I generally think we should all be looking for ways to improve sources of energy and therefore human wealth.
From the investor standpoint or perspective, what would be the good way to get exposure to energy to protect yourself from the economic outlook that you see? Maybe broad exposure through energy ETFs or specific companies. How would you play that?
I like the ETFs. I own one myself. I used to trade crude itself. I think it's below $75 a barrel. It's a buy on the futures markets. Those are both two ways I would do it. The big majors, you sort of know them. They're not a bad way to invest. You can just go buy, the big ones if you want to. Offshore, boy, that's a mess. I don't want to even get into it. But yes, the exploration will be important in the future too.
One of the ones I really like is Chevron, and the reason is because of the nice dividends that it pays. Exxon also.
I own Chevron. I can support that in my own personal account.
But, it's nice to actually get exposure to energy and pick up a nice dividend along the way. So those might represent good plays as well. Okay, how about real estate?
Oh, it's a disaster. And the disaster there, it seems, I would say, counter-argument to my general attitude that paper money is going to be destroyed in our lifetimes, and you would do well if you owned real physical assets. The most common anti-dollar play for the last 2 decades for the common man, was to buy a house. He was a leveraged hedge fund trader in an anti-currency and expecting inflation, which is exactly what he got, and many people made their fortunes in real estate. But that fortune came and is now very vulnerable to higher interest rates. It's not over yet. There will be a time to return to it. Real estate, and it will be a good protection against inflation, but not now. And my guess on timing is over a year, just because there's so much toxic waste to be worked off, corruption in the system. It's going to be a while before all that's gone. And yet, I still own my own house, but I'm not looking to do any investing in real estate.
What about agriculture and commodities?
I'm a big bull in agricultural commodities, and they have done some wild spikes. I used to call myself a grain trader, futures markets, and made some good money in 1996 in a big spike in grains. The trouble is they already spiked this summer on a lot of the problems around the world. But long term, just like energy, food is some people call it processed energy because you charge energy to make food. And problem is that we have not, as a culture, the United States, as a percentage of our of individual or say household spending on food is, I will almost say, too low, in the sense that we've had the Green Revolution, an abundance of available food products. Farms haven't gotten particularly rich. We're only 3% of our population produces all the food we need. But I think there's going to be some difficulties going forward. I'm a strong long-term bull, and you got problems with picking it. I mean, sugar is up to 20 cents from 14. Wheat is at 7.25. It was at approaching around 4 at 4.50. Soybeans are 10. They were 7. It's hard to find it. Coffee, cotton is 90 cents. It was 50 cents a year and a half ago. These are all taking off sort of under the radar. Yes, I'm a bull, but gosh, I can't tell you the right one. And futures market is not for your unsophisticated trader, because leverage can kill you. But 90% of futures traders lose and things like that. But yeah, there's DBA from Deutsche Bank, agricultural investment ETF. That's a round one. For a while, you could play the fertilizers, but boy, I don't think I'd want to try it now. But there's a lot of opportunities there, and I'm a bull in agriculture.
Okay, what about foreign currencies? Many people have jumped into the foreign exchange markets trying to trade. Of course, one of the most liquid markets in the world, I guess probably the most liquid market in the world. What's your take on holding foreign currencies as opposed to the dollar during this time of crisis in America's future?
That's tougher. I have been going around. Well, here's the way to think about it, I think. Somebody once said that the democracy is the worst of all possible systems with its payola corruption and sell out to the masses. But it's the best one we've got compared to all the others, monarchy, dictatorship, and so forth. And that's sort of the way I think about the dollar. I can look at all the problems of the dollar and rant, as I just did. But darn it, the rest of the currencies of the world are in a race to the bottom. The Chinese yuan, our government is trying to get the Chinese to raise the value of the yuan. Well, therefore, you should invest in the yuan. They expanded their money supply by 47% in the last 20 months to July. They did the same thing we did from a command economy of government bailouts and forcing banks to make loans to expand their economy, building bridges to nowhere on an even more massive scale than our own. I don't know, 47% creation of money in less than 2 years. I don't know if you'd want to invest in any of the paper money, because I think they're all potentially racing to the bottom and losers together in a sort of a jump off the cliff, all holding hands. I don't really think any of them are safe, which probably brings me to your next question, and I'm going to jump to it. The only real money in the world is gold or physical assets. Oil. You can use oil to run a society. Gold, because it's the traditional safe haven. And, of course, I don't have to tell our listeners on your radio station to buy gold. I've been telling everybody for the last 10 years to buy gold. It's the biggest thing in my portfolio. And, the simple way to do it is go out and buy the standard ETF, GLD. Yes, it's paper gold. It's not like real gold in your vault. There are better ways. Real gold is a good way. Futures is the obvious leveraged way to do it. You've got to be careful of futures, but that's the way I made money years ago when gold moved up a lot. But all the precious metals, copper is higher than I would think it should be, because I think there will be a weakening in the economies, and therefore you don't need to build houses that use copper and things like that. But all the precious metals, silver may be even more bullish in an up move because it's more volatile.
Well, actually, gold it hit an all-time record high this week, along with silver just bouncing around, getting close to that $21 per ounce price. And palladium has really had a nice run just recently. So I would consider you to be a bull on all those, and you said you hold each of those. What do you think about palladium? That's kind of one of the more ignored precious metals. What's your thoughts on palladium?
I'm not a specific expert on palladium, but it's the cheap man's platinum, and does work fine for the catalytic converters, which has been one of its main uses, being in the same area, the periodic table. It has the situation of being produced by only a few countries that are somewhat politically difficult to deal with, South Africa and Russia. It's not as widely available. I think it's a bull too. The problem with it may be that if we have major economic slowdown, return of a depression, we aren't going to need so many catalytic converters. But goodness, in an implosion of the economies of the scale I'm thinking about, I'm sure it's going to do well too. And there are probably better people you can get better data from than me on that.
And Bud, I know you're traveling around quite a bit right now promoting the book, and you're out speaking at conferences and talking about your outlook. One segment of the population that I'd like to speak to also before we close the interview are those who maybe are kind of getting started late in the game. Perhaps they've had a real major setback here with this latest market crisis that we've had. Maybe they've lost a lot of their retirement dollars. They made some bad decisions. There was a report released this week that said that America's retirement crisis is to the tune of $6.6 trillion in the red as far as where we need to be for retirees to be able to retire comfortably. For those who are playing catch-up right now, I know you're not a financial advisor, but what would your advice be to those who are just staring at this market, are very scared, are concerned they're going to get bit again? What's the best way forward, especially considering that we're in the eye of the hurricane? What should they be doing right now to prepare specifically?
Yeah, obviously the first thing is to do exactly what you've talked about here, listening to radio shows like yours, reading my book, Profiting from the World's Economic Crisis. John Wiley just published this spring. You can get that on Amazon by using my name, Bud Conrad. Buying newsletters that tell you what's going on. I work for Casey Research, all one word, www.caseyresearch.com. We have a slew of free as well as for-fee newsletters. And particularly, I think you should think about the trade of the decade coming up. We have the world's lowest interest rates across the planet for 50 years. Just plain reversion to the mean would suggest they ought to be at 6 or 8%, not 2 and 1%. I think you should learn how to trade that as my trade of the decade. That doesn't mean you have to run out and do that today, but I think there's more money to be made by recognizing the imbalances as I see them and betting against government's confidence in their issues of paper, both as debt and as certificates for trading, that is Federal Reserve notes, namely dollar bills. And protect yourself by getting involved with these markets in a way that is outside the traditional big mainstream brokerage house recommendation of buy and hold this stock forever, because it isn't going to be the way to make money in the future.
Bud, you've been an absolute pleasure to have on our program. I know you're so full of information. I'd love to have you back again soon, and we'll talk more about your book and some of the updates here in the economy. But just in conclusion, if our listeners would like to learn more about you and your work, tell us again how they can do so.
The book is on Amazon. Just search Bud Conrad. Casey Research, www.caseyresearch.com.
All right. The name of the book is Profiting from the World's Economic Crisis. The author is economist Bud Conrad. Bud, thanks again for joining me. I look forward to having you back on the program soon.
Thank you, Jerry. My pleasure all around.